Today, I'm going to explain the power of investments in done systematically every month, month on month, or quarter on quarter, consistently over long periods of time, and what is dollar cost averaging. So, systematic investment planning is a concept that exists in India, which I picked up from, and especially the mutual funds have been very successful in implementing the systematic investment plans in India. In US, it is something called dollar cost averaging done through auto investments, robo-led advisories, and many other ETFs. But overall, the concept is for a common man to do investments in equities. It is very important. If they cannot do analysis of stocks, the alternative is to invest through ETFs or through indexing. And systematic investment plans can be done even in stocks. For example, we can create a portfolio of say 20 stocks across geographies, across sectors, across sizes of the company, and multiple way of diversification. A diversified portfolio of 20-25 stocks, and invest consistently every month some amount that goes from your savings. If you do this way, it avoids the pain of timing the market. It avoids the pain of entry point to the stocks because valuation gets averaged out over long periods of time. Don't have to worry about valuing the company, understanding the businesses, finding great businesses, and creating a portfolio of 20 stocks, investing consistently, systematically, as the name says, and for a long period. It creates immense wealth. And one most important thing to understand is the concept what Pareto has described. It's called the Pareto chart, that 20% of the portfolio makes your 80% of the wealth in compounding. However great the portfolio is, the success rate for even greatest of great investors are 40 to 50 percentage on a portfolio of whatever number of stocks you take. So if that is the performance of greatest great investors, we common people have to agree, accept that the returns are going to be moderated. We cannot really time the market. We cannot really pick the best stocks, and all 20, 25 stocks can outperform. It's not predictable, right? So the best way to do it is create a portfolio, and the Pareto chart explains, that 80% of the wealth will be created by 20-25% of the portfolio overall. So that's a very powerful concept to understand. So the best solution to avoid timing and avoid hassles is to go with an investment plan, create the plan with the focus of long term, and do it systematically month on month, maybe the same amount. And especially when we get these one time bonuses and other sort of increments, increase those and channelize those increments and bonuses towards these stocks and portfolios that we hold, so that in long term they tend to start compounding and give great returns. It's a very powerful concept, and this is nothing but dollar cost averaging as well. So start investing systematically.